Good morning and welcome to Stock Market Today. It's Tuesday, November 6th, 2018, and I'm your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Stock Market Today brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. And you should head over to chaikinanalytics.com/today to sign up for the free email with stock ideas and the ability to follow along with this show. So U.S. equities were mixed and fairly quiet Monday trading as investors appear reluctant to make any major changes to portfolios prior to the midterm elections today. Treasuries were stronger across the curve following weakness on Friday. The dollar was down against the euro, but little changed on the yen cross. Gold finished down 10 basis points. Oil was weaker for the fifth consecutive session, with WTI settling down 10 basis points, but off the worst levels of the day. So your outperforming groups yesterday were the REITs, energy, financials, and utilities. Your underperformers, communication services, tech, consumer discretionary, and materials. S&P futures, as we get to the desk this morning, are down about 20 basis points after that mixed finish on Monday or yesterday. Asian markets were mixed overnight. Japan was up over 1%, but China saw a modest pullback. European markets are mostly weaker here this morning. Treasuries are unchanged to a bit stronger at the back end of the curve. The dollar is little changed on the major crosses. Gold up 60 basis points in WTI. Crude down 40 basis points. And you can really see the ho-hum session that was yesterday if you just look at the candle. I mean, for those of you who follow candlesticks, that's an inside day. But really, to me, this is just yesterday was a day of indecision in the marketplace. We did fade the other day near the 200-day moving average, so I think that that's still in play and that's still important. Support comes into play at 2680 to 2700 in that zone. Resistance comes into play in the 2750 to 2770 zone. That also includes our downward sloping 200-day moving average, and that's why I still believe that that is important. The futures trading to the 200-day moving average on Friday and then fading, I think, is important because I'm of the view that this is going to be solid resistance for a little while because it is declining. You can't see it on the candlestick because this is the cash session, but if you were watching pre-market trade on Friday, we traded right up to that 200-day and then faded. So the real question now is, as we've moved higher, and if we hold support, will the RSI move from bearish ranges? I think that that is important. When we are in an uptrend, the RSI has a tendency to not become oversold and actually spend a lot of time above 50. The converse is true when we are in a downtrend. You will see more oversold readings. Look, we've seen 2, 3 in the past few weeks, and the RSI will struggle to get back above 50. That is a trend confirmation, and that's how I use this indicator. Right now, the RSI is confirming market weakness. If we want to be bullish on the market, we want to see price strength confirmed by momentum. As well, we want to see Chaikin money flow move into positive territory as it did when the market was moving higher earlier this year in May. Has not happened yet. It's strengthened a bit, not nearly as weak as we were a couple of weeks ago, but still in bearish territory for Chaikin money flow. So those are the key indicators that I'm watching. Your market in a minute. If you sign up for that email, you'll get the 5 bullet points of what I'm finding important for our clients today. Markets end mixed in a quiet session ahead of the midterms. We talked about that. Energy stocks rally despite continued weakness in crude. I think that's kind of interesting. Maybe the energy names have discounted that crude oil weakness already and are beginning to move higher. We're going to take a look at a chart that shows the XLE bouncing off of support. Defensive sectors of the market are leading/improving. That continues to be the case. Counter trend strength in materials presents a bearish opportunity. We're going to look at why I think that's the case a little bit later here in the show. And futures, as I said, do point to a lower open. So a little bit of movement, but not really in the power bars for the major indices. The Dow still skewed in favor of the bears, 3 bullish stocks, 4 bearish stocks. S&P 500, 61 bullish stocks, 94 bearish stocks. NASDAQ and small caps were your negative markets yesterday. NASDAQ has 14 bulls and 17 bears. Small caps, 194, 461 bears. Not a ton of change there, given the activity yesterday. Bonds uptick, sending yields lower. Remember, that 10-year yield is testing the highs near 3.23%. I think whether it breaks out or whether it fades has major implications for sectors in the market. Notice that the financials have perked up a bit here as yields have moved higher. And utilities have actually given a little bit back as yields have moved higher. Those are the dynamics that are in play as we watch, and that's why we watch the 10-year yield very closely. And there's that energy outperformance yesterday, up 1.73%, but still no bullish stocks, 9 bearish stocks. And according to the Chaikin Power Bar, small cap stocks are more bearish than large cap stocks. Major indexes are all bearish. Our stock of the day, Franklin St Properties, is a real estate stock that has a very bullish Chaikin Power Gauge rating. Closed at $8.01 yesterday, up 2.96%. And that Power Gauge rating is very bullish due to very strong price volume activity, very positive expert activity, attractive financial metrics, and strong earnings performance. And you can see, as we walk through the analysis, very bullish stock, strong trend, weak industry. Market and model not in agreement. Stock continues to underperform relative to the SPY. Here's our very bullish rating, but here's our underperformance. And we're actually, this rally here has created an overbought condition with bearish money flow. So I don't want to add this stock to the portfolio right now, given the couple of things. The weak industry group, real estate is actually a weak sector. Chaikin Analytics clients who have my note from this morning, we do our sector work, and you can see the power bar ratio for real estate is near the bottom of the list. So it's an interesting name, maybe one to keep an eye on. But right now, given the market environment, I don't want to buy this stock with an overbought condition, underperforming the market, and bearish Chaikin money flow. Our sector tracker, moving over the last 5 days, you can see some of the counter trend moves that have taken place. Materials has been weak. They've rallied 6.7% here. I think that move is counter trend in nature. We'll look at why. Energy, same story. Financials, a little bit more compelling. There's a driver there as rates have moved higher. Obviously, we just talked about that. We'll keep an eye on the 10-year closely. Industrials, that move looks counter trend to me in the near term. Healthcare continues to be leadership. We like what we're seeing in technology, up 2.61%, because if you read my note today and you look at the relative performance of tech, we are at an inflection point, and it is an important inflection point. After a strong couple of weeks, the defensive groups have succumb to a little bit of profit taking, but I think that's going to be short-lived. Staples, real estate, and utilities, bottom 3 sector performers over the last 5 days. Our industry in focus today. Yesterday, we looked at oil and gas services. Today, let's look at oil and gas E&P. 7 bullish stocks, 21 bearish stocks over the past 6 months. Oil and gas E&P subsector has underperformed the S&P 500 by 14.2%. And its power bar ratio is weak. That's a sign of future potential. It has more bearish than bullish stocks. It is currently ranked number 8 of 21 subsectors, having moved down 1 slot over the past week. Some of the indicative, very bearish names there: Tellurian, TELL, Cosmos Energy, KOS, and Wild Horse Resources, WRD, all with very bearish Chaikin Power Gauge ratings. And one that kind of looks interesting to me is TELL. Very bearish stock, weak trend, weak industry group, underperforming the market. Market and model are in agreement. Dynamic duo is in gear, and we're moving towards an overbought condition. I think within the next day or two, TELL sets up as a bearish opportunity. Now, it is an $8, $9 stock, so keep that in mind. But this is the exact type of name and type of setup that we're looking for on the bearish side. Weak trend, weak industry, very bearish stock, underperforming the market, getting close to overbought with bearish money flow. I think it looks interesting. They do report on Thursday. Our trending names, let's look at what moved yesterday. EQT up 8.3%. No real news out, but I did notice that they are out hosting meetings with investors. So perhaps they're telling a good story in those meetings and investors like what they hear. Stock up 8.3%. Same thing with Cabot, COG, up nearly 6%. No news to drive the rally, but again, they're out meeting with investors as well. Lowe's, ticker L, up 5.4% following their earnings. Newell seeing some follow through, up another 5%. Strong day on Friday following their report. Strong day yesterday on some follow through. And Berkshire adds over 4.5% as they released earnings over the weekend. And Warren said he's been buying stock, his own stock. So that has investors excited, send the stock up over 4.5%. On the loser side, Cisco reports earnings that disappoint the street. Stock trades down nearly 10%. Some mixed reviews and takes coming out of BlizzCon. That is an event for Activision Blizzard, sends that stock down 6.7%. Qorvo and other semiconductor stocks in the Apple supply chain hit as Apple came out and said that they were not going to use excess capacity to produce certain, an excess amount of the certain iPhone 10s. So that is hitting the chip companies within the Apple supply chain. Look at weakness in Qorvo as well as Cirrus, CRUS, and Skyworks, SWKS on the day. Those are your read-throughs there. Aptiv, we don't rate this one yet. No real news, down 4%. Akamai giving some back. They had a strong day on Friday following earnings. They give back 3% plus today, or yesterday rather. Marriott beat by 39 cents. Oxy beat by 26 cents. There's your lows. They missed, but stock went higher. SBC Communications beats by 14 cents, and Mylan, MYL, is trading up in the pre-market after they beat by 8 cents. Before the opening today, CVS, big bullish stock. Neutral stocks to keep an eye on before the open, AES and ABC, as well as RL, Ralph Lauren. A lot of China exposure there. After the close, PXD and AIZ, big ones to watch in the neutral bucket. Before the open, bearish name, TDG, MLM, and APD report, and then Devon Energy after the close tonight. Shaken suggests caution when holding bearish stocks in front of earnings. So let's move on to what we're talking about today. Energy stocks rallied despite the weakness in crude, and I do find that interesting because perhaps maybe, stocks tend to be discounting mechanisms, and a lot of times on commodity stocks, the stocks will move before the commodity does, and it's almost a signal. You see this a lot with the gold stocks. The gold stocks will, move up or down before the actual commodity does, and the same can be kind of said here as well. The energy stocks, here's the XLE, bouncing off of support. XLE is at the bottom of the screen. We're bouncing off of support here and moving higher over the past few days, despite this continued weakness in energy. I think it's something to keep an eye on. If the energy stocks can start to form a base and move higher, we could make the case that the discounting mechanism is working, that the weaker oil prices are already reflected in the stocks, and maybe it makes sense to start looking at them. I don't think we're there yet, but I do think it makes sense to keep an eye on some of the shifting dynamics that are at play. As for oil, this is light sweet crude, below the 50-day moving average, below the 200-day moving average, both of those beginning to turn over. Broken support here in the $64, $65 range. And as I said, crude was weaker here in the pre-market this morning. So just something to keep an eye on, something to be aware of. Might not necessarily make sense to just draw the conclusion, oh, oil is down, so let's short energy companies. I think you need to drill down and look at what's taking place under the surface. That's something that we do constantly. Defensive sectors continue to lead. Last week, I showed you this chart. It was utilities. This week, I'll show you the consumer staples. Look at the breakout in consumer staples relative to the SPY. Here we have XLP relative to SPY. 50-day curling higher, about to cross the 200-day. 200-day moving from declining to flat. Breakout through key resistance here, confirmed by momentum. This is the RSI of the ratio, confirms the breakout. And here's the absolute trend in the XLP. You can see investors continue to rotate to defensive sectors of the market. And a little bit of a rally last week in the S&P 500 caused this to stall, but this is a pretty impressive change of trend. If we put up a chart of the utilities relative to the SPY, you would see something that looks almost exactly the same. Investors are flocking to defensive groups. And I think that the rally in materials is counter trend in nature. Here's the materials, XLB, very bearish, shaking ETF rating, now overbought with bearish money flow, underperforming the market. Vulcan Materials, ticker VMC, is my stock of the day today in my note to Chaikin Analytics clients as a bearish idea. So that's it. Get daily stock ideas for free. Sign up for the Power Feed email. Head over to chaikinanalytics.com/today. Free stock ideas. Follow along with this show. And if you like what you're hearing here, help us spread the word. Share our link on social media. I will see you here tomorrow, 9:15.